Episode 1600, and we're talking today about capital gains tax. It's when you sell your property, the tax you do not pay or you do pay. We're going to talk about it today. There are changes on the horizon. Stay tuned. We're going to tell you all about it. Good morning, Mr. Wapshot.
Morning, Mark Novak and everyone. How are you this morning?
Good, really good. It's going to be 40. It's getting towards 40 degrees on this end of summer day.
Oh, beautiful. And a hot topic to go along with it, hey?
A hot one, capital gains tax. It's when you sell your place, and you know, I guess if some people may not have ever been exposed to this, it can be hundreds of thousands of dollars, even millions. And it's pretty much the tax you pay when you're selling your property. And there are ways not to pay it, capital gains tax, which is probably the only untaxed profit in this country that we've seen. But there's changes on the horizon from our friends at Labor government. What do you think about it? What are the changes, Mr. Wapshot?
Yeah, so changes, there's a lot of talk of both in regards to capital gains tax would be essentially halving the discount you get at the moment. So, guys, if you're not familiar, you bought a property, owned it for a year. Let's say you bought that for $1 million. Hypothetically, you sold it for $2 million after 12 months. That capital gain would be considered $1 million because you've owned it more than a year. You would then only pay tax on a portion of that due to the discount. So the current discount is 50%, meaning you'd pay tax on the $500,000 as opposed to $1 million on that capital gain. And the idea or the talk of Labor is essentially halving that discount to 25%, meaning where you would have paid tax on 500, you're paying now on 750.
It's a good way to make landlords not sell their properties.
Yeah, definitely. I mean, it seems as though it's sort of a ditch at the government to try and pull in some extra revenue, and they thought who easier to target than your savvy investors.
It's a good reason for landlords not to get into property when you see another massive hurdle to get into the market. It's this hurdle.
Yeah.
I've got to tell you, I've seen 20 years of landlord hurdles, landlords getting slammed. Landlords don't want to be landlords anymore. So the rental market is pumping. Rents are going super high because landlords are exiting and not entering the marketplace. The incentives are poor and the laws are rigorous for a landlord. So this capital gains tax change, if it comes, I just think it's another slap in the face.
Yeah, it is. I think their idea, or to an estimation, it would pull in a further $13 billion in funding for the government if they were to bring in this change. I know there's a couple of other policies and areas where we thought it would be best looked at trying to pull that money from. But looks like they've, again, gone for, it really comes a bit frustrating, like as a younger person and looking at, a lot of the changes in tax infrastructure and how the government goes about it. It seems that they seem to, go after the person that makes the right decisions, does the right thing.
The rich. Hammer the landlords. They're lords. They're landlords. Now, when we're looking at this attitude around the world, you may be asking yourself, how is this treated in other countries? And it's quite interesting which countries and how they treat capital gains tax. Now, in 1986, it was introduced. that you are capital gains free if you own an asset prior to then, and then they're going to whack you with this new tax. So they sort of did some, I guess, grandfathering when they introduced it in 1986. But when you look around at the countries in the world, what I'm seeing is clever, well-heeled business people are taking their cleverness and their money to other places that are easier to do business. And I know some of the ultra wealthy have always have talked about this from when I was growing up, like your Packer and your Murdochs and those types of people. But now it's evident that we're seeing it. You got emerging companies like emerging countries like the UAE. You got Singapore. You got low tax threshold there. Areas where when it comes to capital gains tax, there's none.
Yeah, it's crazy for Australians. I mean, don't quote me on this. It's either third or second per capita, the highest taxed rate individual in the world. Australia,
Out of
once you
100
couple it.
out of 180 countries.
And for a place that, like, when you look at the economic side of things, for a place that's got massive natural resources, great agriculture bases here, and we export, twofold, threefold more than we use here ourselves. It just doesn't make sense, does it, when you've got all that access to energy infrastructure, natural resources, like I said, and we're here paying, higher food rates, one of the highest food rates across the globe currently at the moment. So looks like it's almost like you sort of feel the government goes for the easy grab rather than probably, putting something a little bit smarter together, you'd say. But yeah, I guess the whole idea of this capital gains tax decrease and discount is in their ways to open up affordability for new first home buyers. Generally, your investor will go for that, 2-bedroom unit. And generally that's where your first home buyers are looking to purchase. So I think that's their idea behind it. Will it work? Will it do more good than bad? Will it do more bad than good? Will it come into effect? There's a lot of questions, I guess.
Well, that's a really nice way to look at it, the way you looked at it there. But I think there's, when you're looking at net effects to consider as well, I think no landlords are going to, it'd be another block for landlords to enter the market. They're going to go, how do I dispose of this asset? If it's heavily taxed or if it's taxed more than it currently is. And I also think that, existing landlords, I think it'll freeze them into properties because they're going to have to pay more tax to sell them. So there's there's probably 3 or 4 net effects that'll come out of it. And what is the net? It's just another tax. It's just and I really have to say that the countries that have really put themselves on the map in the last couple of decades, the way they've done that is from some really good tax systems to incentivize people to invest in their country. So it's interesting times.
It is. Yeah, and Lisa's noted there again, first home buyers are getting knocked as well with unforeseen interest rates. First home buyers aren't investors. Yes, it's it's such a big topic at the moment, but I think, when you look at the supply they're supposedly bringing into these areas, how are they assisting these developers? I mean, that's probably the biggest factor I think that's going to help first home buyers in the market in terms of affordability is backing up those individuals, these developers that bring the stock to market. Having a look into the life of a developer and seeing the hurdles, hoops, costs that you have to jump through in order to put a site together. That's probably one of the biggest and best changes that they could make, rather than looking at, creating more burden on Australian citizens.
Oh, you've just opened up a can of worms. Development sites that aren't stacking are going to be even harder to stack with this tax.
Yeah, they're just making it harder and harder, and it makes you feel like there's no one on the ground looking at what's truly happening. You get that sense that someone's behind a desk and heard something from Joe around the corner, and it really is confusing to see the sort of policy these guys are putting forward. When you're down here on the ground, you can pinpoint the issues and what needs to happen, but it just never does.
Yeah, and I think that's quite interesting because what you'll maybe start to see people doing is rather than it's these developers are finding it hard enough to make development sites stack. There's not a lot being built in the Northern Beaches because stuff doesn't stack up. But I think if you introduce another tax here, or a further tax here, again, it's just another reason why a development site won't proceed for another 5, 10, 15 years. So it's going to throttle and reduce stock if you're imposing taxes like this on people. But I guess some individuals may think it doesn't affect me. It affects landlords. Screw them. But I think that would be silly to think that, because there is far and wide and net effects that touch everyone. I saw something on the news yesterday where they were saying about selling off military assets, and only the rich people are going to buy the stuff in, I think it was Darlinghurst. But it's not introduced. It's not going to influence people that need it in the affordable level. These are $2 million, $3 million apartments. But what people have got to realise is it has a knock-on effect to every price range, whether it happens in a low price range or a high price range, a disincentive or an incentive. It knocks on through all price ranges.
Definitely. And I think one thing I want to note as well, obviously this hasn't been brought into effect yet. It will come towards the budget time that, this probably gets a little bit more serious. But I'd say that a bit of the real estate transactions that have been going on, especially for Albanese himself, he seemed to have offloaded 3-4 investment properties over the last couple of years, recent years, with some considerable gains there. So, maybe take that as an indication. And the other thing I think as well is, and how they're trying to play it, is they've always coupled capital gains tax along with negative gearing. And what I've seen in a lot of the commentary is, they've sort of left negative gearing alone and focused on this capital gain. So it sort of feels like they're going, oh, look, we're not going to touch negative gearing, but we are going to get you here. So it'll be interesting to see where it all comes to fruition.
Capital gains tax, capital gains tax, capital gains tax. There it is. Josh, the economist, thank you.
Thank you.
Look forward to seeing you next Thursday.
Sounds good. Maybe we'll unpack that, the site stacking.
Yeah, let's do that. All right.
Sounds good.
Stay tuned.
See you guys.
See you guys. Bye.